Hey, what's up? Welcome to DGen That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Nvidia, ticker symbol NVDA. And so I wanted to go over this. I was just recording a stream for members going over unusual whales activity, and I was just kind of going over market sentiment and stuff, but really for myself, justifying my actions, recording it for members. And I just thought I would share this with everybody who's interested about the Nvidia chart because I think it looks really, really bad. And I think that I made a video on the VIX that I think that we're going to be gapping down on Monday. And, I was just going over stuff in this stream. And yeah, I mean, I think it looks really bad. And I think that people are too used to all-time highs and that we're going back to them. And I just don't think that's the case. I think that we're going to see a gap down on Monday. I might be wrong about that. We'll find out on Monday. But a lot of that really just came out in going over the Nvidia chart here and how, so this parallel channel, I have to give credit to Gareth Soloway, who pointed this out. That's from his game plans. His channel's Verified Investing. I try to watch his game plans every single day, as well as his trading the close. It just goes over a lot of fundamental, broader market stuff. Technical analysis really is what the focus of his channel is on. But I've learned so much from him, so I have to give a shout out and say, that is where I drew this parallel channel from, really just coming from those pivot points where you can see those little blue circles. And so from this, it was pretty clear. I did not expect it to happen this quickly, but Nvidia came back from the high here down to, its close of about 22%. So a pretty massive drawdown. I think a lot of people thought this was going to be a bull flag. It was going to break higher, but that's just not the case. It does look like it did retrace to the golden pocket, which is the range from the 618 to the 65% retracement. That's around 106 to 105, right around that range. We actually closed below it at 102.83, $102.83, being down 4% on Friday, September 6th. I should note I am recording this on the 7th. And yeah, I just wanted to go over how I think the chart looks really bad. I think it's going a lot lower. I don't think it's going to happen right away, but I think it's just really good to be exercising caution in the market right now. And so, I'll just go over my breakdown of that. And so here looking at this, following this like 22% drawdown, what we saw after Monday, so on the 3rd, price came down almost 10%, about 9.5%. And then we started to consolidate here. So that makes me think it's a bear flag that this is probably going to break lower because, not even really looking at the chart, but just breaking that down, that, down move consolidation, that's a bear flag. Okay. And then from that Monday, I should say Tuesday. Sorry, I keep thinking about the start of the week being Monday, but this was Tuesday, a 4-day week beginning on Tuesday. On the 3rd, on the Wednesday, we see, further downside closing below the low on Tuesday. So we closed, as you can see here, right around 106, right around that 618, closed at a price of 106.21. So just 2 cents above that 618. And then we got this massive wick to the upside. And so that tells me that buyers are stepping in, trying to buy the dip, trying to push it higher, and it's just not going. It's pulling back. And so, it doesn't look so good. Maybe that's an inverted hammer suggesting there's a reversal, or, maybe that's a gravestone doji and that this is going to continue down. And so on Thursday, we got a bullish engulfing candle that did engulf the candle from Wednesday. So that's good, but still a wick to the upside. That's pretty notable, especially compared to the small baby wick to the downside. And so that tells me that, price is still trying to get pushed higher, but buyers are not able to push it as high as it went the day before. It just gets suppressed back down. Did close higher on Thursday, so that's good, but it's just there's not enough pushing it up. And then so on Friday, you could very clearly see we got a bearish engulfing candle. So it engulfed all of the candle from Thursday and Wednesday. So that doesn't look so good. Also, it did close below the uptrend, the base of that parallel channel that I've drawn there, hitting a low of $195. Hitting a low of $100.95. And so, that to me, closing the week like that with what looks like a bear flag here, with big wicks to the upside, suggesting that buyers can't push it higher. It's being pushed back down by sellers. And then it's just consolidating here. And also, if we look at the volume, and I'm not the best at volume analysis, so take it with a grain of salt, but on the day that we move down here, almost 10%, a lot of volume dumping the stock. And then after that, we don't get that much volume. It just consolidates here. The little bit of volume attempts to push it up, but it gets pushed back down. And as it does reside there, volume diminishes. So, there aren't buyers jumping in enough. Big money is not jumping in to push this back up. And then on Friday, not only do we get this bearish engulfing candle, we get a surge in volume that encapsulates, the volume from the prior two trading days. And that just tells me that this looks really, really bearish. Also, I'm new to including this in my analysis, but if we look at the MACD, when it was red over here, the MACD, this is coming down. And then, this little bit that it was green, it went up, bumped into resistance, and then now it's red again. It's coming back down. And I had talked about in the VIX video that I think we might be seeing gap down on Monday. Maybe it's because of some world news or some event happening, or maybe it's just because the charts are not looking strong enough. I think that this could be coming lower, and I think that it's going to be breaking lower, and I think that the bounces that we see moving forward are going to be to lower highs. And so I think it's very, very good to not always be buying the dip unless there is a clear plan to trim on the top side. Like over here, that would have been a great swing, buying the dip here on the 5th, going up to, 40, almost 43%, just about maybe 45% to the upside from the low to the high there. That's over the course of, about 3 weeks. So that's a great trade right there. But it's not to all-time highs. We're not making new highs. So very good to be cautious with it. And so, with this coming down, one thing that I don't have on the chart is the 786, because I thought that it would just be coming down to the golden pocket here and then maybe bouncing. But over here on the 5th, on August 5th, we saw a break of that parallel channel. And so I think that, we could be breaking the parallel channel again and going lower. And so what I can do is I can add another level to the Fibonacci retracement here. I'm just going to do the 786, and that is coming down to right around $100. We almost got there on Friday, but we didn't quite make it. And what I could see, if there is to be a gap down in the markets like there was on August 5th, which was a Monday following the Friday of August 2nd, we saw this massive gap down across the markets, which was a great dip buying opportunity. So from the close on the 2nd to the open, that was down 14% for Nvidia. So pretty big there. But, it reclaimed those losses in just 2 days, and then proceeded to go higher. So I think that's great. So if we do see a dip to like $100 or maybe 90.69 again, somewhere around there, I do think that we could see a really nice bounce. But again, I think it's good to have an exit strategy, which, could be, this is from the retracement going from the bottom to the top, so take it with a grain of salt. But, an exit level could be right around 115, corresponding with the 382. Or, best case scenario, maybe 121.69. That's a fun level, and, maybe we do bump into some resistance there, as we did have some consolidation above it. Getting above that is going to be met with sellers who bought here thinking it would go higher, and it collapsed. They probably want to cut their losses or, get out at break even if we do get up to that level. Also, we extend that line over here just with the cursor. That was a little, valley here. And so I think that there could be a lot of resistance around 21.22 or 21.69. Have fun with it. But really, like getting up to 115, I think it's getting pretty risky. And let's see, taking a step back, what does this kind of look like? I'm going to attempt to draw it up here. And, so we could see, what do we have right here? There's a little hump. Okay. What do we have right here? There's another hump that's a little bit bigger. And then what do we have right here? Another little hump. And so just to make this more fun, I'm going to make that line thicker. And I like to make head and shoulders patterns purple for some reason. I don't really know why. But, that looks like a head and shoulders pattern to me. That looks really, really bearish. I'm sorry if you're long Nvidia, but it even has devil horns. That is how bearish this is. Or not bull horns, not to be confused with their, this is bearish. Okay, this is bearish. Those are little bear ears. How about that? And so I just think this is going down. One thing we can do with head and shoulders is measured move. So I'm just taking this data price range or date and price range, going from the ultimate high here right around 140.76, coming down to this approximate neckline as that is the channel. So it's not exactly the neckline because we did get a pierce of it here, but this just being approximate. All right, let's take that. It's approximate. I take that measurement to if we do break over here, and where's price going? You see it right here, right around $50. So it's dropping 50%. And that might seem really scary. You might think I'm full of it, and maybe it takes months for that to happen. But let's take a step back and see, is there anything that could suggest that we might be pulling back to 50 and maybe finding support there? So like that would be the bottom. There is something that stands out to me in the chart. Look over here. We got all of these tops. We got all these tops, all of this consolidation. Let's get a measurement of, how long we were residing here. This is going back to May, the end of May 2023. And, we consolidated in this range for 223 days. Let's see, I'm going to pull up my little calculator. 223 divided by 365. There we go. That's, 0.6 of a year, whatever that is, over half a year. Trading, consolidating here. And where's the top of that? Where's the top of that? It's right around $50. So I just think that there's a high likelihood that Nvidia is going to be trading at $50 a share, maybe a year from now. So mark my words, September of 2025, I think Nvidia will be trading around $50 a share. And people who are buying the tops up here saying we're hitting new all-time highs will look back at this video and say, hey, Andy, you were right. You and Ed, you guys know what's going on. We appreciate you. And so, yeah, just be careful with this. I just think that there are a number of technical signals, including the bear ears, suggesting that this is going down. And it might be bouncing, like I said, around 90.69. There might be a really nice bounce from there going up to 115. That could be an excellent trade. In bear markets, we will see bounces on the way down, and there's going to be plenty of opportunities for taking profits on the downside as well as the upside. But as far as long-term investing goes, I think that Nvidia is a trap right now. And I mean, you do whatever you want to do. I've presented my case here. I hope it's helpful for you guys. But, those are just my thoughts. If you found them helpful, make sure you like the video and share your thoughts in the comments down below. Make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Hope you guys take care.